Okay, ladies and gentlemen, welcome again to our 11 sessions. So now we are going to talk about the future of the technical analysis, something that I've been using here on my work at the Fusion Analysis here at 11. And I'm going to bring you to the Julius de Kempenaer, the creator of the RRG, to explain to us and explain how all the process that we can use the RRG. Julius de Kempenaer, welcome. Thank you very much for being here. So introduce yourself. First of all, introduce yourself. Tell us about a little more about you, and let's talk about the RRG.
Yeah, of course. Well, thanks for having me, Rafi. It's my pleasure.
Yeah, my pleasure.
It's a bit sad that we can't do it live in Sao Paulo. I'm still waiting for that opportunity to come visit you.
Yes, yes.
So maybe next year.
Yeah.
But yeah, so my name is Julius de Kempenaer. I am Dutch. I live in Amsterdam, or technically just outside Amsterdam.
A farmer boy.
I am now a farmer boy. Yeah. 2 years ago, we moved from literally central Amsterdam, where we had a very small apartment house, to a pretty big farm outside of the city. So we're adjusting, but we're enjoying it. And the good thing is that I now have the office at home, and I don't have to go there anymore. I like both. I like Amsterdam. I love working in the city, but this is also very cool. And we have 6 horses now here. So when I'm done with my work and my trading, I go literally outside and shovel poo and ride on tractors and work with wheel loaders and all that kind of stuff. So that's my joy.
Great.
Very quick bio, maybe. I was after school, I was trained at the Royal Military Academy, so I graduated there. I served all in all a little over 8 years in the Dutch Air Force.
Wow.
And after that, I moved to the financial industry, first at an asset manager, one of the biggest asset managers in the Netherlands. Moved on to investment banks, worked for Rabo International and Kempen & Co. And then during that time, the RRG was developed, and over time, I gradually moved on and founded RRG Research, which is where I am right now. I could tell you lots and lots of stories about working on the trading floor and working with clients, etc. But maybe we should do that some other time.
Yeah,
we won't talk a lot about RRG then.
Yeah, let's stick with the RRG right now. So how did you come up with this brilliant idea? I know that I think that the first RRG launch was on Bloomberg platform. I met the RRG for the first time I think it's 2011 or 2012. I don't know exactly.
Well, RRG Go on Bloomberg, which is the function on Bloomberg, is RRG Go, was launched in January 2011. And then I promoted, together with Bloomberg, RRG in South America in the summer of 2011. I made a trip from New York to Bogota to Mexico to Sao Paulo. So maybe that's the first time you
probably
made connection with RRG. But the thought and the image and the visualization, I already used that in my own work while I was still at the investment bank. So I mean, it wasn't invented on Sunday afternoon at the kitchen table. It's something that brews, that when you work and you think about things and you try and you know how research works. You try and you got a piece of paper and you write it down and it doesn't work. You throw it away. So all of a sudden you got like a whole pile of pieces of paper or crumbled up that don't work, and then you have one that sort of kind of works, and you start working with that and play around with it, and that's how it came to life. So we're talking early 2000s, 2003, 4, 5, and it gradually evolved over time. And at that time, I did a lot of presentations for Bloomberg. in Europe. And on one evening, I was presenting in Zurich for a group of investors. And I thought, you know what? I've been publishing about this thing. Let's just put it out to a bigger audience and see how they respond. So I put that out, and everyone was, oh, that's cool, blah, blah, blah. And then the Bloomberg representative said, this is very cool. You should show this to our head of graphics in New York. So this is somewhere 2005. Now, this guy, head of graphics of Bloomberg, was in New York. I wasn't going to fly to New York just to show him that. So I think it was towards the end of 2006. He was traveling through Europe, and he was in the Bloomberg office in Frankfurt. So I took a road trip. I drove to Frankfurt for basically that one meeting, and that was a very short meeting. We spoke for 20 minutes, and after 10 minutes, he said, "I like it. I want it on the system."
Perfect.
And then it took like 5 years before it was there. So there were many reasons why it didn't work, because the technology at Bloomberg wasn't there yet. There were lots of legal hurdles that weren't there yet. Obviously, there was a sort of conflict of interest, because I would love to have, something in return, and Bloomberg didn't want to pay. And, so you got a lot of things to clear and to take care of. But all of that was taken care of. And then in January 2011, it was launched on Bloomberg. And then it rapidly went to Thomson Reuters, to Optima, to stock charts. We're on the website of the Hong Kong Economic Journal. We're working with State Street now. So we're growing. We're not there yet, but more and more people get access to RRG, which is very cool.
Great. And how did this all start? I mean, how did you find out that the RRG is great for the relationship with the stocks and
my job, I was working on the trading floor of an investment bank. So my job was being an analyst. An analyst at investment banks are semi-salespeople. You write your research, but you've got to call your clients to explain the research and basically sell your stuff. That's what
quite the same here at 11.
So you know exactly what I'm talking about. Now, the thing is that the business is very competitive. All these institutional investors, they can trade with every investment bank in the world. So why would they trade with you? Because they like you, but hopefully because they think you make very good research and you have very interesting information. I remember we had a course. We had at the investment bank, we had a course once, and we had an old investment banker. He had a Scottish accent, and he was telling us, how to produce and to publish your research. And the line that stuck with me was, "You got to make the facts sizzle." It's like you really got to have something that really stands out and that sets you apart from the rest. And so I was working as a technical quant analyst, and I was covering the stock 600 across 18 sectors. And how do you stand out? Why is your graph, your stuff more important or more interesting than somebody else's stuff?
Capture alpha. How do you do this?
So I started playing around, and I got the question that I got answered or asked very often was, which are your best 5 stocks? Which are your best 5 sectors? Because, I was always, preparing some stuff, and then I would call up these investors and say, hey, I'm looking here at financials and chemicals. Can we have a chat about it? And then he would say, no, Julius, no. This week is technology week. Goldman Sachs is coming with these companies. And so what are your best 5 stocks in technology? And obviously I hadn't prepared that, so I had no answer. And also I was thinking, dude, there's nothing going on in technology. You need to look at financials or something like that. So I wanted to way to show them, which I wanted to make the fact sizzle. I wanted, this is it. This is what you need to look at, and in a very short format, because they were always busy. So because to answer the question, what are the best 5, and I was working with relative strength, because for institutional investors, relative strength is basically the only thing that they're interested in. They have they are not at liberty to go 100% cash. They need to be invested, so they need to know where they can find outperformance. So relative strength is basically the only thing that you can use.
Of course.
But you know that when you work with raw relative strength, these numbers are not that you cannot compare them. You can have a one-on-one relationship, and you can look at that line. When the line goes up, then it's good, and when the line goes down, it's bad. But the numerical value of that line is you cannot compare. So you can have a situation where a line goes up and the relative strength is 0.3, and you can have a line that's coming down where the relative strength is 3, but still you should go with the 0.3 instead of the 3 because it's going up. So something needed to be done to make all of that comparable across a universe and across securities.
Probably normalize things.
Yeah, you got to normalize, but also you need to find trends. So normalizing is not a problem, but you need to find a trend and then normalize. So there was like, so all that stuff was basically going through my head, and I was trying to play around and figure that out. And so the first thing that came out was what is now known as the JDK-RS ratio. That was my trend measure of relative strength. That the RS ratio measures trends in relative strength. So that was my first. I had that metric, and I published about that, and I could draw a graph of it, and that was all very cool. And then I remember very well that in 2001, you had the dot-com bubble, and so I was publishing my research, and obviously technology was way up there, and it was outperforming, and it was all very cool. And then the whole thing starts to fall apart. You know, NASDAQ comes from 5,000 to 3,000 and all the technology sectors. But you know, it's trend following in nature. So it takes some time before that whole thing starts to come down. So I got an email from an Italian hedge fund manager. And he says, hey, Julius, this time your system didn't work too well. He's right. You know? What can I do? So back to the drawing board. It's cool, but we need some sort of an early warning system. So we started playing around with momentum, with rate of change, because that's basically the only leading indicator that we have. You know, momentum turns before whatever it's measuring. Obviously, you have the same problem as with relative strength. These numbers, you know, you can't compare them. So that momentum thing needed to go through a same sort of algorithm, same sort of process to pick up those trends and measure the trend changes. And that became the JDK-RS momentum. At that stage, we had a table with 2 columns we could rank and play around with. And then literally at one day, I was playing around with Excel and had these 2 columns, and I thought, oh, what kind of a chart can I do? And I was just basically playing around, and then hit scatter plot and says, oh wow, this is interesting. What is this? And then the first thing when you look at it, you need to look. So what is it? What I'm looking at right now? So it's like, what's there, and what does that mean, and how does that do? So oh, this is pretty cool. So started publishing that, but at that time there were just little dots on the quadrant, so you couldn't really see any movement. So next step, and this is Excel, Visual Basic, lots of spaghetti code. You know, I was the only person that could read it and that could work with it. So I programmed it so that I could also see the previous value. So I could have the current position on the plot, and I could have the previous value on the plot. So I could see where it was going. And then, and you know Dave Keller. He's one of your presenters in the sessions.
Yes.
At that time, Dave Keller was managing director of technical analysis at Fidelity. He was one of my clients. So I was talking to Dave every 4 to 6 weeks just to go over the markets, what I was seeing, what was going on. And he was one of the very, very, very first people to receive RRG research in a very basic format. So one day I'm chatting with Dave on the phone, and we're looking at sectors and stuff. And I was producing a report with graphs, and the RRG would be the last part, or what is now known as RRG would be the last part of the report. And then Dave says to me, you know what? I always print off the last page of your report. And it was sent as a PDF. And he said he was printing that out and sticking it on the wall. I said, Dave, why are you doing that? I mean, you got a PDF here. I said, you know what? So when I have a whole stack, and you remember when you were at school, you had these notebooks, you would draw at the bottom of the book, you would draw a little puppet.
Yep.
And then on the next one, you would draw the same puppet, but a little bit further ahead. And then when you would say,
yes,
you would see that little man walking down your notebook.
Yep.
And that's what he did with the pages. So he took that and he said, when I do it like that, I can see where they are moving. It's like, wow.
You found the trend.
That's cool. Yeah. So that was like, now we can actually make that come to life. So we started the animation, and then, so then I programmed that again in Excel. Great. And we could actually play history, and we could see. And that was really the aha moment. Like, wow, this is it rotates, and it's rotating around a benchmark. So everybody was always talking about sector rotation. But now you could also show that it was actually rotating, and I could show that to these people.
Great.
That's how the visualization came to life.
Yeah, you were talking about the benchmark. So let's stick with this. For somebody's new here, I think our audience here, we have the buy side and sell side. So let's talk about the RRG, specifically for RRG. So one of the most interesting things that I love at the RRG, that you can change the benchmark, and you can compare the stocks between them or the stocks between the benchmark. So can you explain to us the way it rotates? How can we read the details, and feel free to show us the momentum and the relative performance?
I think one thing that we needed to talk about is because we spoke about how it came to life, but also the why. And one of the questions why was because these investors were asking about the best 5 stocks. And the thing is, when I was publishing this research based on RRG. And one summer I had an intern, and what I asked him to do is go over all the research that I produced and look at the results of the recommendations. And the recommendations were outperform, neutral, or underperform. So it was a monthly report. So we had 12, and then it was for 4 years, so about 50, not very much, but still. So he did that, and he came to the conclusion. He said, well, these calls are significantly outperforming the benchmark. So that's a good thing. But there was still a bit of a judgmental call by me in that report. So we went back and created some sort of a set of rules that we could run through a computer, and we did that. And obviously we could have more observations then, because we could do it on more basis. We could go back more years. And so he did that whole exercise. And again, he says, it gives significant outperformance over the index. But then he did something that was super interesting. He took all the results, all the outperformers and all the underperformers. And you spoke about alpha.
Yep.
And what he found out is that the underperformance, so when I said underperformance, that would generate significantly more alpha, significantly more excess return than the outperformers.
Wow,
and that was interesting, because that all, and this is before like RRG, the visualization came, because that also made me think, I need a way to tell those guys who were always asking me, what are your best 5 stocks? What are your best 5 sectors? And now I had this piece of research, and I could say, when he asks me, what are your best 5 stocks? I say, dude, asking me the wrong question.
Yeah.
You need to ask me where you should not be. It's much more important than where you are. And if you think about it, and I think everybody who's listening, we're all investors, we're all in the markets, we all have portfolio. If you're honest with yourself at the end of the year, you look back at your portfolio, you look back at your performance. I am not 100%, but 95% sure that each and every one of us, they look back and they say, wow, if I would have been able to avoid those bleeders, those stocks, those positions that really killed my performance, if I would have been able to avoid those, that would have helped me so much on the other side.
Yep.
And that is, I think that is one of the, before we start looking at RRGs, that's one of the things you need to keep in your mind, because RRG not only helps you to figure out where you have opportunities on the long side, but it will also help you to figure out where you maybe have opportunities to the short side, or what you should just simply avoid.
Yeah.
So that's, I think that's a very important part of an RRG.
So this is a money management thing that so if you avoid something that you are of course you're managing your risk, and you're managing the bad trades for the way that you can improve your results for the future. So that's great.
Yes,
that's perfect.
I always tell people that, you know, what we do, you're an analyst, we're a researcher, we're trying to look for opportunities, we're trying to look for positions, but that's only 1/3 of the whole process.
Yep.
Because when you figured out, okay, I'm going to buy this sector, I'm going to buy that stock, then the next decision is, how much am I going to buy? Am I going to buy 5%, 10%, 3%, 2%?
Okay.
Am I going to buy stocks? Am I going to buy options? Yeah, so you got the whole portfolio construction thing, and you got the money management thing, and then you have the analysis, and that's like 3 things that are all interacting, and they eventually bring you your results. Right. It's not. I know people. You can give them tomorrow's newspaper or 100% ironclad guarantee what's going to happen, and they still mess up because they have the wrong money management, the wrong portfolio. You know, if you tell someone that stock ABC is going to reach 100 in 3 months' time, they are capable of buying a call option with a strike price of 100 that expires exactly in 3 months.
Yeah.
So you know exactly what's going to happen, and you still mess up because you take the wrong position.
Yes.
You know?
Yes.
So there you go. Anyway.
So RRG. Show us the RRG and explain how it rotates, please.
I'm gonna bring up. I'm gonna bring up my PowerPoint. No, that's the wrong one. Sorry, you may cut that out because I am messing up right now. Here's my PowerPoint. That's what it was, right. So let's go right here. So, well, we covered this one here. I like this line. It's how to see the big picture in one picture, because that's essentially what it is doing. People always want to have a definition. So just to make sure that we're on the same page, what an RRG shows are trends in relative strength or trends in performance of multiple securities in a universe against one benchmark and against each other. Now, be careful, they don't show relative performance as such. That's a very important thing that you need to keep in mind. There are 2 building blocks. We already discussed them, the RS ratio and the RS momentum. And as you can see here on the graph, when the green line, which is the RS momentum, drops below 100, the RS ratio has formed a peak. And you can see that the momentum line leads the rolling over in the ratio in the relative trend line. So that's important to know. And when we then go to the construction of an RRG, we have the 4 quadrants, and then when the RS ratio is above 100 and momentum is above 100, it shows up inside the leading quadrant. And what that means is that that relative trend is upward, and it is still being pushed higher by strong momentum. Now, we discussed that momentum, rate of change, is a leading indicator. So when momentum starts to roll over, the element, the security, moves to the weakening quadrant. in this case, the trend is still up, but it's losing momentum. So it's still going higher, but the pace, the momentum of that move is getting slower. Now, if that deterioration of momentum continues, eventually the sector will move over to the lagging quadrant. And what you'll find here are sectors or stocks or whatever you're looking at that are at a relative downtrend versus the benchmark, and that downtrend is still being pushed further down by negative momentum.
Okay.
Now, again, just like on the other side, the first thing that will happen is that your momentum will start to curl up, and it will push the sector into the improving quadrant. So here we have a sector that is still in a relative downtrend, but the momentum is fading. It's starting to improve. And then eventually, when that improvement continues, you will get the rotation back to leading, and we made a full circle. And obviously, the benchmark is the center of the chart. So the benchmark that we're looking at is the center of the chart, and you will see sectors or stocks rotating around that benchmark. And we can actually go to the next slide, and here you see an RRG. This is for US sectors. The Brazilian sectors look exactly the same. So this is static. And if we then go to the next one, we can actually see that we can make it move. And this is Dave Keller's like flipping,
Okay.
and you see the animation. So now you see, I believe this is 26 weeks of history of this year. And you can actually see the rotational pattern taking shape over time. So
Right.
this is the basic construction and the basic interpretation of an RRG.
And Julius, when I see the tails, the animation, I see some of the tails are too long and someone it's too short. So and some of them are outside around the center of the RRG. And when I came up with the RRG for the first time with the Ibovespa, I look at the stocks and the bunch of stocks. The most of the stocks are close with the center of the RRG. So can you explain to us what is the relationship between the tails and the distance between the tail and the center of the RRG?
Yeah, there are actually many. The thing is that once, I mean, at the start, this looked like, oh, right, this is easy. But over the years, we have learned so much. There is so much more information on this graph than just the rotation and the rotational nature. So, first of all, this is the benchmark. The closer to the benchmark, the more in line the performance of a sector is with the benchmark. So we're looking at sectors right now. So when I talk about sectors, it can be currencies, cryptos, bonds, stocks, etc. It doesn't matter. So if something moves close to the benchmark, that means that the relative performance, the relative trend is very much in line with the benchmark. If something is very close to the benchmark, it's very hard to create alpha.
Yep.
So the further to the outside a tail goes, the more opportunity for alpha, because that sector is now strongly moving away from the benchmark. And at some stage, it's got to come back. So stuff that's very far away, that's on the outskirts of the RRG, that's where big opportunities for alpha are lying. Now, another thing is the tail length and the distances. So these tails, because this drives me absolutely crazy when that thing moves. So this is static. Okay. Look at the tail. So we got energy here. This is obviously a very long tail. These are all 5-period tails. So the history for every sector is exactly the same. Now, energy is showing this super long tail, but consumer staples is like hovering around the same, and telecom services is exactly there. So what does that mean? That means that the longer the tail, that means that there is power behind the move. And we know that energy is now really underperforming. That's really powering down. Whereas communication services is still at an outperformance, still at a relative uptrend, but it's very gradually. There's nothing special. It's just minding its own business and just going higher and higher and higher. And the same goes for consumer staples, although these are on a relative downtrend. So because they're on the left, and they're just hovering a little bit around the 100 here, and doing their own thing. So long tails indicate big moves and very often change in trends, whereas short tails indicate a very quiet trend, a very, very shallow trend, that's really not going anywhere. Now, I don't think there's a very good example here, but here you can see the distances between the week to week. This is a weekly RRG. The week to week moves, and all of a sudden they start slowing down. You see that the momentum, and you see that all of a sudden healthcare is starting to roll over. If we go to the next one where we had the rotation, you can actually see that behavior where that trend, that tail length, all of a sudden starts to accelerate. So here the materials, for example. Let's see the next move. So here is materials. It's relatively short. It starts to roll over, short tail, and then all of a sudden, whoop, whoop, whoop.
Yep.
You see these distances, they start from week to week, start accelerating. And that's when you get these big moves.
And Julius, sorry to interrupt you, but
don't worry.
Does the tail has to rotate clockwise, always like this, or maybe because I see some interruption here over there?
They always rotate clockwise, but not necessarily always through all four quadrants. Okay. So you will see, for example, here materials again. You saw that it was in weakening, but it curled back up to, and now it's moving down. So if we wait here for the next run, so here's materials. See that it moves from weakening back into leading, and then it starts to move down. When that happens, that's actually one of the strongest signs, strongest situations, because it means that it's a new up leg in a trend that's already rising. And if it happens here, you see utilities, they're in improving and they roll back down. And you can see that that's a new down leg in a trend that's already declining. So they're usually pretty reliable moves. What you can also see, and I saw that here, energy is interesting because it looks as if it's hooking. So it goes up and then all of a sudden it hooks to the left. And that is the case here on the weekly. But what actually happens, if we would bring this to a live chart, which I can actually do because I have that loaded up. Where is my Optima? And I need to go, because this is exactly the same chart that we were looking at.
Okay.
Although this is interesting because right now I have bubbles on the end, and this indicates the weight of the sector. So you can immediately see that information technology and healthcare and telecom services are heavyweight sectors, where energy and materials are much smaller and staples. So this gives an extra point of information. So let's look at the energy sector. So we're looking at this tail here. So you saw that it started moving, and this was in the week of July 9. And this is weekly. If we bring that to a daily, and we focus on energy. So where is energy? Here is energy. And we see if we can scroll through. This is September to July. Energy, it's all the way there, July 9. So you see that on the daily, it was already in lagging. So you see that the rotation goes clockwise on, see here, look at energy, because it was strong, that's what we saw. And then you see it here on the daily, it moves up. And then all of a sudden, you got this very rapid rotation, and then it shoots off into the lagging quadrant.
Yep.
And
So
this is clockwise. You see that on the daily, it is clockwise. But on the weekly, that move, that rotation on the daily is just so fast that on the weekly chart, it just looks as if it's Here you go. Boom. You see? So right here. So on the daily, that is really a clockwise rotation, but it's just too fast. And that's why on the weekly, it's showing up as if it's just hooking to the left.
So it's like quite the same that the classical bar charts that when you are in stuck or with the trouble with weekly charts, like you don't see an uptrend or a downtrend. You see just a phase that your congestion phase. So maybe you can bring your charts for daily and see what it comes first. So this situation, it's like the daily charts momentum and the trend push the weekly charts down. So you can always play around with the daily charts and weekly, and also intraday, isn't it?
Yeah, you can do this intraday too. We can actually make this, let's do 60-minute. Takes a little bit, it needs to download some data, but it'll bring it up. But you're right. I think it's very important that that you combine the various time frames. Depends a little bit on what sort of investor you are.
Okay.
But if the daily trend or the weekly trend is very strong and very solid, and you see that on the daily you got a rotation through weakening and maybe through lagging and back up, that's sort of a pause in that long-term uptrend. So if you see a strong weekly trend and you see weakness on the daily and you see it, for example, curling up inside lagging or inside improving, that could be a very good entry or re-entry signal to onboard a next move in that long-term weekly chart.
Right.
On the other hand, when you see weakness occurring or building up on your weekly chart, that daily could give you an early warning signal about when it starts to really deteriorate. Now, here we have an hourly RRG for the US sectors, and you can see that the rotation is exactly the same. I mean, if I wouldn't show you or tell you that this was a 60-minute chart, there's no way that you could tell me that this is a 60-minute chart. And it's exactly the same as with a bar chart or a candlestick chart. If you take away the price, if you take away the time and the both axes, there's no way you can tell whether that's a weekly, a daily, 10-minute or an hourly chart. So you've got to read them exactly the same.
Okay, great. So can we use the RRG as such? I mean, because I think this is great, because if I see some stocks or sector that are improving and heading northeast direction, so this is a great opportunity to get inside the stocks or the sector. But that is all. That's what can we do to improve?
I strongly recommend against doing that. I mean, RRG is a great visualization. It'll give you a high-level overview. It will tell you where markets are going. It gives you a great perspective on markets, and you can do that on all levels. I call that the investment pyramid. We can start at asset class level, go to bonds, to stock market indexes internationally. We go down to sectors, everything you want. But ultimately, you need to check up with your price chart. I would not recommend investing just on an RRG. I don't recommend anyone to use one single thing. I mean, it's basically the financial markets is a big puzzle that you need to solve, and you need to find all these pieces. And once you think you found them, somebody messes up the whole puzzle, and you got to start all over again. And RRG is a help to give you a better perspective of that puzzle or parts of the puzzle. That's I think the most important thing that RRG can do for you.
Yeah, I work with a lot of individuals, traders and investors, and I think the most they want everything done and everything, all the process, like, give me the best stocks and the best sectors, and that's all. Give me the target price and the stop loss, and that's all. So, but when you use RRG, of course, you have to bring it with another things like me. I use it with the fundamental things. So we have a big team here with fundamental analysis. So they bring all the information that I have to choose and pick some stocks that I know that it's good to invest, especially in the long term, because of its fundamental. So the DNA of the Level Financial, it's fundamental, and I bring the charts to set some timing and momentum to get in size or maybe risk management. So in your perspective and in what you see, what is the ways that you've been seeing the people using RRG? Like only for individuals, can the portfolio managers, the PMs, they can set their portfolios on the RRG? So what you've been seeing on streets, the people using RRG?
It started out, my client base at the investment bank were institutional managers, institutional fund managers. So it was all based on relative, where you don't want to be, where you need to be. So it can be used as a tool to find opportunities, to find trading ideas. But I do know portfolio managers who use RRG to monitor their portfolio. So here we are now looking at the Brazilian sectors, the MSCI Brazil sectors, the current picture. But you can imagine that a portfolio manager loads up his holdings and then compares it to his benchmark. And I always make the joke that if they do that, and as long as everything is in the green quadrant, they can go out and play golf or whatever they want to do. Yeah. But as soon as their holdings start to rotate into weakening or even into lagging, they need to get back to the office and do work and figure out what's going on. Yeah. So for institutions, that is a great way of using it, and that's basically the original toolage and the original way to do it. Now, for individuals, they have much more flexibility than professional investors. If an individual doesn't trust the market and he wants to go to 100% cash, then he just does that. He just sells whatever he has, goes 100% cash, and that's fine. But if you're an individual, it'll help you to put your focus to the areas of the market that are most interesting. So if we look at the sectors now here in Brazil, and we talk quite often, but I'm not a specialist in the Brazilian markets. But on this RRG, I can immediately spot a few things that are interesting. Now, the first thing is IT, obviously. That's the strongest sector at the moment. It's still moving to the right, but you see that it is flat. There's not a lot of momentum left. And it has already made quite a big move. So would I jump on that bandwagon right now? I doubt it. Probably not. So where am I looking for opportunities? I'd be looking for opportunities here in consumer staples because of what we just talked about. This is already on the right-hand side. So it's in a relative uptrend versus the MSCI Brazil. And it went through a correction, and it is now starting to pull back up. That's interesting. So what I then do is I want to see that chart and bring that to life. And now I have the chart and I have the RRG lines, and I can see that this is actually, look at this, it's resting at support, relative strength is starting. So I think that's actually a pretty cool situation because you're buying a dip in an already new trend. So there you go. Just from the RRG, you pick up that tail, and then you can immediately see it. Other things that are interesting: utilities, healthcare, industrials. Looking at energy, that has had a big run, but is now rolling over. So I'd be less interested. Materials, remember that we said, where should you not be? Well, for Brazil right now, avoid materials, avoid financials, avoid consumer discretionary, and avoid real estate. And I tell you what, if you are an investor, also think in terms of risk and reward. If you focus on the top 5 stocks where you should be, and you build a portfolio of 5 positions and 20% each, or you focus on the weakest 5 stocks and you build a portfolio where you avoid those 5 on the bottom, your portfolio will be much better diversified, which means that you have a lot less risk.
Yep.
And you will beat the benchmark. If you only focus on the top 5, if you got them right, you will beat that benchmark much bigger than by avoiding the 5, because your portfolio is much more concentrated. But your risk is pretty massive, because if one of these 5 goes wrong, 1/5 of your portfolio goes down the drain, and that can really hurt you, and it can really prevent you from beating your benchmark. So depending on what your goal is and what your mandate is from your fund or your client or whatever, makes a big difference.
Yep. And I can see, I think the market's going to defensive stocks, because I see consumer staples improving momentum and heading northeast, and I can see the utilities as well, and healthcare. So markets like rotating to defensive stocks.
That's another thing that you can get from it. So you can get your sector rotation, and you start talking about defensive, offensive, cyclical. So by looking at the rotations of the various sectors, you can build in your head, you can build an image of a market that's on offense or on defense, depending on which sectors are strong and are outperforming. And I completely agree with you. If you would only look at staples versus discretionary, right? That's a very good metric for offensive, defensive. Right. And you've got consumer discretionary from weakening, and we just discussed this. This is a weak sign because this is already a downtrend and it's starting a new down leg. And you've got staples on the other side, strong, went to a dip and went up. And now add to that utilities, which is also a very classical defensive sector going there. So I agree with you. I think markets are
and this, with this perspective, I can see that we can bring some trade ideas with this sector. I mean, maybe a pair trade with picking up a stock with a consumer staple for a long position, and maybe consumer discretionary for a short position. So we can bring this long short position, and let's bring me up with another question. What kind of trades that we can do with the RRG? Pair trades, day trades?
You can certainly do pair trades. A lot of hedge funds do that, indeed, So I'm not sure whether there are sector ETFs in Brazil. So you could buy the consumer staples ETF and you could sell the discretionary ETF. Maybe you have options on sector indexes, or you could just go into the sector index and find the strongest stocks in consumer staples and the weakest stocks in consumer discretionary and put them against each other as a pair trade.
Great. Perfect. And what is the early warning signal? Let's talk about the consumer staples. I go long and buy it, and I expect to improve the momentum and get inside to the leading quadrant. But what is the signal that I'm wrong, and what should I do when I see the signal?
So that one was coming. Sorry. So the early warning signal is what we call RRG heading. And RRG heading is you got to imagine the movement from one observation to the other, and I think healthcare is probably a good example. So you need to use it like a compass, and you would put the center of the compass on the previous observation. And we all know, compass 0 through 60 degrees is north, 90 is east, 180 is west, and 270 is, south, 270 is west. So this is now moving, I think it'll be 40, 45 degrees. Okay. That is good. So everything that is between 0 and 90 degrees in that angle, then it means that the sector is gaining on both axes, and that is a strong thing. Now, the cool thing is that this can happen, this can start anywhere on the plot. It doesn't have to be in improving or in lagging, it can be everywhere. So if you look at staples, you can see that that heading changed here.
Can you zoom in just a little bit?
Sorry, yeah, I can do that.
Okay, great, thank you. Yeah.
So here it was still negative because it was still, below, and the heading is actually. Can you read the dialogue? There is a line that says heading 337 degrees.
Yep.
So that's still not good. But then you got here, you are heading 32 degrees.
32.
And here we are at 32.85. So that's between 0 and 90, and it now has started to pick up on both scales. And that's the good thing. That's what you want to see. And now it starts to move. So that's your early warning signal. Same thing when it is inside the leading quadrant. I'm a little bit less pure because, when something like this happens, it doesn't make me nervous right away. If it starts to really head lower on both scales and it is close to crossing over, so when you will see a negative heading at a very high reading, and there is still plenty of room between a crossover, then don't worry too much, because these are very often the sectors that go through that dip and then rotate back up. If it is a situation, well, let's look at utilities, because that's exactly what it did, starts to move here very close to the benchmark, starts to become negative, that's not a very good thing, because this thing will be on the other side before you know it, and then you got this. Now we got, it starts to pick up here, and now this is very early improvement, and now it's almost crossing over. But you can also see that it is starting to start in that good heading while it is inside the lagging quadrant. So here comes a little bit of feeling and interpretation looking around the corner. So the closer to the 100 line, the more weight I would give to a good heading. And also when it is closer here, a negative heading would be more of a sign to get out or lighten up than when it happens right here on very high levels.
Right. So, Julius, we are here running out of our time.
You were in charge of time, my friend.
Okay. So where can we find the RRG? Where can we find your work? So explain us where can we find more things and explaining about the RRG.
Yeah, what I do, I have a connection with stockcharts.com. I write a blog there, the RRG charts blog, so that's free. If you go to stockcharts.com and you look for the RRG blog, you find articles on a regular basis. Every Tuesday, I have a 30-minute show called Sector Spotlight, where I present on sectors, asset classes, anything RRG, relative rotation, relative strength. And then you have the software that we're here using is the Optima software that you are also using. And as I said in the introduction, we're on Bloomberg, Reuters, etc. But quite frankly, Rafi, we have a Brazilian audience, so I'd say that they go to 11 for everything they want to know about RRG. And you write in Portuguese, I do it in English. My Portuguese has gone a little bit rusty, so I'm trusting on you, and you're my man in Brazil for RRG and the promotion and the research, and I think you're doing a great job there.
Yep, and we've been doing this great. Our trades are improving, and that's why, because I have the greatest teacher, the creator, so no problem with that. So I can translate it into the Portuguese and report daily everything's going on with the RRG, the sectors, with markets going to the defensive, aggressive, offensive, and that's all. So Julius, thank you very much for this presentation and nice chat. I love the RRG from the first time that I met the tool and the first time that I met you at the New York. So ever since I've been using every day. And of course, it's my traits and my observation and analysis are clearly much better than before, because everything is relative. That's you always said in your presentation. Everything is relative. So you must have your position on the best relative performance, not exactly the absolute performance. I've been explaining for individuals almost every day about it. So thank you very much, Julius. I love this. I hope everybody enjoyed our conversation, and I hope that people get more information about the RRG with us at 11. Thank you, Julius.
Thank you very much, Rafi, and everybody just go look up Rafi and his work. He's doing an excellent job there. Thank you, man.
Bye.
Tchau.
Há 6 anos, nascemos com um sonho: ser a fonte de conhecimento de todos os investidores do Brasil. Sejam eles grandes, médios ou pequenos. Para nós, todos têm o direito à informação de qualidade. Toda manhã, acordamos apaixonados pelo desafio de entender, explicar e prever os movimentos do mercado. Somos reconhecidos como a melhor casa de análise financeira do Brasil. Somos uma central de informação independente, imparcial e livre. Não compramos ações nem vendemos, nem sequer ganhamos comissão de nossos clientes. Sabe por quê? Porque é a única forma de ser independente. Quando o mercado grita invista, 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 nós gritamos, antes de investir, conheça, conheça, conheça. E aqui na Eleven temos qualidade na informação. Temos respeito por todos os brasileiros que poupam seu dinheiro com esforço. Temos a vontade de ajudar os investidores a discernir e poder falar de igual para igual com seu assessor. Queremos criar investidores livres, que tomem as rédeas de seus investimentos, que tenham liberdade de pensamento e autonomia. Nós somos a bússola do mercado de investimentos. E agora chegou a hora de cumprir nosso propósito como empresa: democratizar as informações para todos os investidores do nosso país. As mesmas análises que os grandes investidores têm acesso, agora podem estar nas suas mãos. Pronto para ser independente? Seja bem-vindo à Eleven.